And as you can see, the market's fallen out of bed here on the 4-hour chart, and it's also in line with the wave count that we've been tracking through this, from this current high through here, in terms of down for one, back for two, down for one, and back for two here that we're looking for last time. There is a wave count that that can also have the wave two here as this one over here, in terms of an A wave, a B wave, and a C wave here, and then the wave three down through here. So that's a possibility. Not that it makes any difference just yet, but we'll be mindful of that and we'll investigate that further through there. So for the US 30, the normal thing is that if the pivot within group 1, the 100, 200 and 300, the 200 becomes a retested resistance, then that really confirms that the price will be drawn down into the 15,000 here. Normally the distance above the level here is normally the distance that we'll see below the level here, so that's something that we can also bear in mind as well. As it stands, we'll continue just to watch this wave structure unfold here. So as I mentioned, the wave structure through here should be pretty swift and sharp, because we are in wave 3 of wave 3 here, and also possibly wave 1, wave 2 here, and the third wave. So a third of the third, so to speak. On Friday we were talking about the 15,350 here, that's that green line, as being a balance point through here that you could possibly work with. So as that's become the retested resistance in here, that would have certainly offered that situation. As I just pointed out before, this wave 2 could also be here as well, and the reason for that is that this is a corrective ABC here, and that's fine, but this here looks like a B wave coming down and a C wave coming up here. Well, a C wave, what I mean by that is in 5 waves. So in a zigzag, in this particular case, a flat correction, a 3, 3 and 5 correction through here. So it's certainly possible. The length of wave 3 here will obviously be come down further. The wave 3 here will be longer than this wave 1. But still we've got wave 1, wave 2, wave 3 coming down, and wave 3 here will have 5 waves in it. So the 1, the 2, the 3, the 4 and the 5. So much further to go to the downside just yet. So continue adding to short positions. That's just it on a smaller chart here. So look, there's going to be, there's going to be in this section through here, there's going to be buyers sitting in through there. So this fast trend here will slow down into here. We'll see a bounce back up into, probably see a move to 15,000, back up to 15,1, and then down through there. So that's what we'll be looking at. But once we've got the first bounce high in, then we'll see the other bounce highs become smaller. So the S&P 500 is the same again, except we've got the medium level 1650 to work off. And once again, we've been on this 4-hour chart, we've been working through a series of waves 1s and 2s through here and looking for the break lower, and there it is, and also expected to go lower as well. I've just done this triangle little pattern here because sometimes at the apex it normally sort of pegs the low quite well in this case, and sometimes the high. Not that this is a triangle, because triangles don't occur in wave 2, they do occur in B waves, and this is not a triangle as such. It's just because that's just got that particular shape there, but it'll give us some sort of guide to searching for the low there as such. The distance above here would be the distance below, so our target is into the 1600 area through here, but we'd expect it to go lower than that. This is the same structure here, just on the 2-hour chart here for the S&P 500. So if this is counted here as wave 1 here, ABC for wave 2, and then wave 1 and 2 here, if that's going to be the case, rather than having this wave 2 over to here, then we would see wave 3 down into the 1610 area, wave 4, wave 5, to make the low of wave 3 such, and then we'll see wave 4 bounce off here, and then wave 5 down, and so on further to the downside. So really you just need to understand group 1 and navigating around the closest largest number, which will be the 1600 here as well. If wave 3 is short here, no, it should be okay, because sometimes it comes back and retests the trend line back up through here. So just be mindful of that. Until we've had a retest in here, keep your stops above the 1650. This is just drawing it in closer here on the 15-minute chart through here. So we'll see. Yeah, look, the same thing again. It's Group 1, 1610, 1620, and 1630. Just expect some type of correctional patterns around these particular levels here as such. Yeah. Okay, the European markets are pretty much the same as well, as you can see through here. The FTSE here moving down. It's also moving down to its medium level as well, which is the 6,500 here. A little bit like the 1650. I just call them 65 numbers. But yes, that's still unfolding to the downside, and will continue to do that further as well. So we've got nice clean 5 waves down through here for wave 1. Back for wave 2, we're looking at wave 2 on Friday, possibly going back and retesting the the 6,700 here, but the US wave count was already underway and pushing further down. So the wave 2 that we had here, originally the ABC here on the 20-minute chart was correct when we looked at it last time. So we're starting to see this sort of unfold through here, and will continue to fold lower. The DAX is in the same situation as well. The Australian market is a slightly different sort of wave count, but taking it from the 5,000 here as such, we now need to look at this going down to 4,800, and considering this is wave 1, back for wave 2 here, and wave 3 opening up through here. Wave 3 can be twice as long as wave 1, or 60% longer than wave 1. So you can take the length from here and put it to here and add 60% or another 100% to get the target. But look, anyway, we'll be looking down at the 4,800 here with a bounce off the midpoint 50 here, and then we're going to see buying orders come in at 30, 20 and 10, which will slow the market down. Yeah, and then work down into here. We could see on Friday on the cash market we could see selling volume coming into the market. So just get this into play here a little bit. Pretty obvious, really. So we've got a lower close on higher volume. So sellers have come into the market here as such. Alrighty, let's have a look at the commodities. And even though the China manufacturing figures are above 50.8, so a little bit higher than expected. So we'll see some sort of support there. But I just wanted to point it out here, a couple of things here. So this is Friday's close here. We can see that over these last few days here, we've got lower volume coming in on the sell side. So even though the market's come down, we just see that as a corrective move. So we're counting this up from the low here, up for 1, back for 2, possibly up to the 3rd here, or the 1, 2, 3, 4, 5 to here. Either way, what we're looking for here is this is the top of group 1 here, the 2,300, so 100, 200 and 300, so it gives us the top of group 1 here. So it's just normal to have a corrective. We're bullish in this market, but we can see that this, sorry to rabbit on, but look, this move here is quite long, isn't it? This one here for 3rd wave there, and then this one here is quite shorter. So we can see that it's slowing down. So what we can expect through here is some sort of ABC correction across here, maybe pulling back to the 2250 area here before we see any rise up through here. And if you're trading this market here, you would wait for the corrective pattern to confirm itself across the 23 here, and then find support on here. That would create the timing. So in terms of using the trading levels, we would normally get out here and then get back in over here. Time is money, and getting the timing right is, well, that's how you do it. Well, one way of doing it. Alrighty, so let's have a look at commodities. Okay, so what we're looking at here is the DJUBS commodity index, which groups all the commodities together. So they've all got a small percentage part in this. But, what we've been looking at here for some time is that this particular pattern through here coming up is corrective. It's in 3 waves, so it's corrective. So it makes whatever happens here a continuation pattern, a continuation of the current trend that's moving down through here. And this particular trend that's been moving down through here, we know that we've got a nice little 5-wave structure here as an impulse wave. So because we understood that impulse wave there, we know that we're going to get another one, right? And this one here is still unfolding. So what we can see here is is new lows going to be formed through here. So we can expect that low to come out through here. We can also expect a bounce back up off the off the 130 here, which is also the top of minor group 1 as well. So we can expect some sort of small little rally like that before we see further downside. And that's what you can expect of commodities. So ready to short that, and also gold as well. Now the base metals here, looking at copper here, a bit interesting here, and I've just left this chart as is here because this little move we got down through here is 5 waves, gives us the direction, and then we had our counter trend, our ABC counter trend, as you know, and then we had an ABC correction down through to here, and so if that was the case, then we were looking for this to move back up through here. If it found support back up through here, and then moved higher through there, because that would be once you've got the high in place, if you've got you got your high in place, you got your pullback. If you get a move up from that point there, that's when you would trade along from that point. Now that's not the case in this thing though. If this low here, this low here gets taken out, just moves down through here, then this is not going to be an A and a B and a C through here, okay? What's going to happen then is that we're just going to have more of a picture to the downside, so I'll remove that, and then we'll put this little wave 1 here, because we've got 5 waves down, would be the case. We can move that one out the way for the time being, and we can put this one here. So instead of being an A, B and C here, this would be down for 1 here, back for 2 here, and then this would be wave 1 of the smaller degree. So we could change this one here to wave 1 here, and this would be wave 2 that stage, and then would be in wave 3 coming down. Now in wave 3 coming down, there'll be 5 waves, and this is the first one. 5 waves down here for wave 1, back for wave 2, and moving down through here. So if the 325 gets taken out, then you know to short materials, well, at least add to them as well from there. So when we're looking at US BHP, we can see that overnight it's moved down further, and it's going to be testing the 65 there. But what makes it more important for us is the BHP for Australia. Friday was, well, we're looking for 5 waves up through here, which we've got an impulse wave and as a wave A or wave 1, and then we're looking for an A, B, C back here. So we've pretty much got in our that stroke, that one. So now we're looking for this move back down through here. So you could probably short that and put a stop there, but unfortunately it's going to gap down. So, but there's still a bit of space in that if you want to take that there. So that's good. I just want to have a look at the banks too while we're here. We've been tracking this one here. So I can get rid of that. That's the wave 4 there, and that's the wave 5 there. So that's where we're up to. We've got this 1, 2, 3, 4, 5 here, and that could be topping at the top of wave 3 here. And then because of this bracket 1 here, this 1, 2 here, 5 waves up here for the third wave. We'll look at wave 4 coming back, and then wave 5 going up. So for a short time here, we can have the banks and the materials to the downside here. So short-term bearish on those guys as well. So yeah, alrighty. Well, just go to the oil market here for a second. We're still looking at it 5 waves down. We thought we may have it completed here, but that's not the case. So we'll be seeing this oil come down into the 90 area through here. So you can see that on our site as well in more detail there. But look, expect a 92 to be retested, expect a bounce off 91, and also a bounce off 90 as well as it moves lower through there. More interestingly is the gold market. We were looking for another high, as you know, up in this area, up through here. So it appears that gold is moving with indices at the moment. So, you know, we've also got like this 5-wave structure developing to the downside here. So it may not be finished here. We may come down to the 1380. If that's the case, we'll be looking for an A, B and C back. That's to the 50% mark. I think the 61.8 is 1405. So, just looking for that ABC back through here, and then we can look to short through there. Once that's sort of confirmed there, you can look to short that, because we've got 5 waves here. That means we're going to get another 5 here. So we're basically turning bearish gold now, and our target to the downside, sort of longer term, is just below the 1300 there. So good shorting opportunity coming in there. And this is silver here as well. So with silver here from the 23, the top of group 1 here, at this stage we've got 3 waves down. It looks like we've got wave 4 developing here, and then wave 5 down through to here. If that's the case, if that low gets taken out through here, then we'll have 5 waves to the downside, and then we can expect 3 waves to the upside here, and then another 5 waves to the downside through here, which in the bigger picture would take us down towards this area through here. So a shorting opportunity for precious metals and base metals are coming on board, and following indices, and indices have obviously have sort of led the way in their own little way. So we're short them first, then gold, and then we'll be looking at shorting the euro as well. So let's have a look at that. Okay, the US dollar through here. Look, we've basically been looking for a little 5-wave structure to the upside, and then we're looking for an A and a B and a C. The 61.8 retracement level is, or 50, 60 is still sort of in this area through here. It's at the 50 at the moment, at the 83. So we're looking at 82.72 or 82.50 through here. I was kind of thinking of this down here as wave 1 and wave 2 here, and wave 3 down, and wave 4 and wave 5, but it's getting a bit this has moved too far up there, but I would still like to give it a bit of time, because it has bounced off the 83. We would expect to bounce off the 83. So let's just sort of see how this pans out. So it's possible that the low is in already, right? So that wave the wave C of 2 can certainly be in play there, okay? So, but we'd need to push up above the 83.50 here. So if we've seen that move up through the 82.50 here, then that that's in play there, okay? And retested support on the 83.50 would be another confirmation of further upside as well. That's really important for a lot of reasons. Firstly, for this market itself, and secondly for the euro as well, because the euro will be doing the mirror opposite here as well in terms of its wave 2 high as well. And the thing that makes it a little bit tricky is that this is in 3 waves here when we expected it to be in 5 waves. So let's just see how we go. We may just end up getting this down through to here. If that's the case, then we can look at it from this point and look for it to move to the upside. So just a little bit unsure there, on the euro, on the 1 hour chart here. See this move up through here that we're expecting to be in 5 waves is more of in 3 waves. As an A and a B and a C really to this point here. Yes, we can rework the correction as a WXY, so to speak, but let's just sort of see how we go, because the other thing here is that this is the 130 here, and if you understand the levels at all, this would be the arrival, the reaction, the first high above the level, then the A, the B and the C across here, and then further upside from that point. So we need to allow that swing to unfold through here, and then allow the 130 to become the support or the resistance through there. However, if on the short side, if the top is in place here, then this 129.72 and 65 as retested resistance would be the trigger and the trade setup for lower prices to come. And then we could look at this being wave 1 down to here, an ABC for wave 2, and then wave 3 to come down, okay? So it will be worth using the 129.72 as retested resistance and keep the stop above here, then bring it down and so forth from there, just in case. But keep it small, we can always add to the position as well. So the US dollar is and the euro just not quite confirmed as such, but if they took this low out here, then that would be confirmed. So short that low, short that retest of 129.72. If this stays above this little low here, so at the 65 mark there, then then expect this to be an A and a B and a C through here, and then up there, making one more high up through there. But there is a strong bias that wave 2 top is in place, and the same with the US dollar here, that low there is in place as well. But I just can't confirm it, so there's risk there. So just be a little bit mindful. Support on the 83.50 would just about call that low in there, so just sort of bear that in mind. The Australian dollar didn't retrace as high as we thought or like to, so it looks like it's certainly in a bearish mode at this point in time, with the 96 as the retested resistance here. So a breaking of the new low through here at 95.50, the midpoint, or even intraday here with the, once it opens a 95.72 as a retested resistance, then pop the stop above the 80 there, which would be obviously 83. If not at 83, then you really got to go to 86 or 87 at that point. You need to be above the 95.85 if you're going to go above that area through there as well. So yes, we've got 5 waves up through there as a C for the wave 4 there. Just expect just a little bit low, that's all. But the other thing that we need to be mindful of as well, when you think about it, is this wave 1, 2, 3, 4 and 5 here. This can also be panned out as an A and a B and a C correction here. But if it goes below this 95.20 here, it's not where it is, this low obviously a little bit sort of higher there, but 27. But if it comes into the 95, say 20 here, or then it's taken that low out there, then what that does is just create an overlapping wave structure of the next degree higher bearish. So then we know we're on the right track at that point. We'll be going lower from that point there. Also, if it takes out this low here as well, then it's also bearish as well. So you can short that low there, but expect a bounce off the 95.30 back to the 95.40, and then it should make its way down through here. But it can get a bit rough through here, but eventually the 95 would become the retested resistance from that point, and you can trade lower from there. So alrighty, well, that's it. And just to recap, the indices are falling out of bed, the currencies are hot on their heels, and so are the commodities as well. So we can expect a very interesting and probably a very bearish week in the coming week. Alrighty, thank you for listening.